60-point gain, so almost 0.8% higher for the Hong Kong market.
Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time.
Industry players have estimated a cash compensation requirement of 50,000 crores from the government, as an immediate measure.
The standard is on Bharti Airtel, a big downgrade coming in from JP Morgan. They've downgraded the stock now to underweight from overweight, and they've sharply cut the target price to 710 versus 860 earlier.
The market opening is here and it's absolutely quiet.
Some rebalancing appears to be taking place.
Perception has gone down after the moderation of the COVID impact.
We saw Maruti Suzuki kicking off things by unveiling their electric concept SUV called the EVX.
The Nifty is now at 17,900.
विकसित भारत के निर्माण में मध्य प्रदेश की भूमिका बहुत महत्वपूर्ण है.
Everything is future, right? Starting from CNG, LNG, and electric, and hydrogen, etc.
अभी एक हफ्ते पहले जो हुआ था, 3 तारीख की बात बताई जा रही है, उसमें ये दीवार दिन प्रतिदिन और चौड़ी होती गई. आज एक दीवार पे देखा, कल दूसरी और परसों तीसरी.
As far as the markets are concerned, extremely volatile. They have been choppy since we started the trading session.
That was the day so far. You're with us here on Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, Rima here in the studios, and Nigel is joining us from the newsroom floor. Guys, hi. Good afternoon. Almost slow burn for the market. Boring perhaps is not a word one should use on television, but it is lackluster. Not very much by way of activity, at least if you look at the index. Stocks we can discuss, and there is always action in one pocket or the other. But on the Nifty, after the initial 1.5 hours, not very much has happened. Why do I say that? Because initially we got a sell-off, which took the Nifty almost to the December lows, the weekly swing low of 17,774, which was made on that Monday, 26th of December. And we got to within 50 points of that. Then there was a 150-odd point bounce from those levels to the day's high, which then got sold into, and then we've got this 30-40 point kind of market ever since on the Nifty, basically. Which are the pockets which are kind of standing out? Metals is one, PSU banks is another, and IT is a relative outperformer. These indices are up 0.25%, 1/3%, in that range, not very much beyond that. Broader markets, advances to decline ratio is 1:1, so it's again neither here nor there. But must say that lots of well-traded, well-owned names are off 3-4% on decent-sized volumes. And that list is not small. So that is something to keep an eye out on as well. Just leave you with one graphic which kind of, if you have the inclination to understand what is happening, why is the market here underperforming while the rest of the world is not doing too badly, I think that this graphic does that job. This is basically FPI flows as tracked by Bloomberg, and this is 2023 till date. It's just, a week and a half or so, but I think it's very stark. India has seen about $1 billion and $300 million of outflows, whereas you look at the other markets, Taiwan, South Korea, Thailand, etc., which have seen sharp inflows. This is year to date, as I said. This, of course, could change. This is very, very short period in time. But I think it does do the job well of explaining this underperformance for, as we've been saying, no real reason, maybe some reallocation, etc. We put that out earlier. So keep an eye out on this as well. This is relative, of course. In absolute terms, of course, for the viewer, what matters is what stocks do on a day-on-day basis. But on a relative basis, if you zoom out, I think this is helpful to understand what's going on. Rima, hi.
Hi, so let me just follow this up with the performance that we've seen week to date. Week to date, the Nifty and the mid-cap index is absolutely flat. In comparison, the Hang Seng is up 2%, the Nikkei is up 1.8%, the Taiwanese markets have gained close to about 2.5%. So as FPI flows into India have slowed down, we've seen India underperform the rest of the global markets. But today has largely been a no-news day. Once again, the Nifty is hovering around that 100-day moving average of 17,906. Talking about individual stocks and sectors, the Nifty IT index is up 0.3%. But at one point of time, the Nifty IT index was up close to about 1.2%. So we've seen the Nifty IT index come off from the day's high. TCS, HCL Tech are showing you divergent moves. So TCS is holding up and it's trading at a level above what it was prior to earnings. But HCL Tech has now slipped to the low point of the day ahead of results tomorrow post-market. As pull up that intraday chart of HCL Tech and you would see, remember HCL Tech was the first to flag off that Q3 earnings season is going to be impacted due to higher furloughs. They tweaked their full year guidance as well. And look at the way HCL Tech is nervous ahead of its earnings. Tata Motors has seen follow-through buying today. Yesterday, remember, it was up 6% on the back of very strong wholesale JLR number, 6% high yesterday. Today, another 1.5%. And Bharti Airtel is down 3.5%, but it's managed to recover nearly 2% from the day's low. Today is a no-news day, very quiet in terms of news flow. But tomorrow, post-market hours, you've got the US CPI inflation print, India CPI, December CPI and the November IIP. Infosys and HCL Tech will be reporting their numbers tomorrow. And plus you've got the weekly options expiry. So perhaps tomorrow you may not, start the show by calling it a little boring. We've got a lot to, track tomorrow, so maybe the markets will be a little more active. Nigel, what are you looking at?
Well, the markets are never boring, guys. I mean, it's an interesting day of trade. The Nifty Bank has come back after a brief hiatus, right? I mean, the last few days we've been seeing it's underperforming. Today it said it had enough of it. It's doing a mild outperformance, which is good from a bullish perspective. The 17,800 mark, well, that's protected, but that's protected just for now. The bounces are getting sold into, so that's a bit of a worry. But it seems that 17,800 odd mark, that's the fighting zone for the bulls. In terms of levels today, we almost went to around the 17,800, went to around 17,824, and then we saw a bit of a bounce. We almost got to 18,000, in fact, but we were met with some bit of resistance. And that's because the 17,900 call, well, that's been very, very active. We are seeing call writing at that particular level, so higher levels are getting protected. And that's likely to be the case even till tomorrow, so that 18,000 odd mark will become the near-term resistance. And on the downside, well, we are seeing 17,800 put. It continues to be very, very aggressive. In fact, on the put side, that has the highest open interest. So the writing that we're seeing out there, that's giving me hope that maybe, in fact, we see that a defense of that particular level. And the bulls will feel that they are in with a fighting chance. The PCR is around that 0.7, 0.75 odd, till that 17,750 to around 17,800 holds out. Let's see what the final 60 minutes hold for us. Back to you guys.
Thank you for that. And we've got a very special closing bell today. The Indian markets have been choppy since the start of the year. What's the outlook for 2023? We'll discuss the risks and triggers with the top team at Aditya Birla, Sun Life AMC, A. Balasubramaniam and Mahesh Patil. Max Financial has been one of the big gainers today after Axis Bank revised its deal to acquire 7% additional stake in Max Life. Details on what brokerages are saying. A whole host of pharma stocks in focus on the back of fresh brokerage calls, and steel companies are on our radar after JP Morgan in its latest note believes more price hikes are on their way. All this and much more coming up in Closing Bell in the last 1 hour.
Okay, all right. Well, as we speak, the Nifty has gone back into the green, so that's good news as well. And a couple of these names, actually, they're bucking the trend. Just pull up Tata Communications. Suddenly, that one has spiked to the high point of the day. So keep an eye out on that one. Nalco as well is seeing a bit of an up move. And India Bulls Housing Finance, just pull up the intraday chart out there. Just highlighting a few of these names because they are moving rather well. Well, Mitesh Thakkar is back with us. Mitesh, what do you make of today's trading action? We're as flat as can be. We spoke earlier today when we started off and we were flattish at that time. We're flattish right now as well. But your view on the index and also a couple of stocks, if you could mention?
So, Nigel, actually, treacherous day of trading. My sense is that because we are contracting, because we are in a range, the market is yet to give you a decisive move. And therefore, I think it's just chopping around within a contracting narrow kind of a band. So, not much on the index. I think looking at the last 2 weeks of price movement, 17,800, 820 has become an immediate support pivot. I think unless until that breaks, shorting may not be a good idea. And on the upside, we need to at least get past the recent bounce back high of 18,150 to get some strength on the index. So I think till that happens, the idea is to be in a slightly wait and watch mode. The stock calls that I have, metals are doing well, and NMDC is something which I picked up. That's a buy. Keep a stop below levels of 126 and a target of 136 can be looked at on the upside for this stock. And PVR is something which is reversing from oversold levels. It had a good decline made around two lows around the 1620 mark. So what we can call is a possible double bottom formation. We are still Yet to confirm that, but the indicator suggests that, a slight early trade with a tight stop at 1680 can be taken. Once the breakout about 1735 happens, the stock can go to about 1760-65 on the upside.
All right. Thanks very much, Mitesh, for that. Well, we have a special set of guests now joining us. A. Balasubramaniam is Managing Director and Chief Executive Officer at Birla Sun Life Asset Management Company. Mahesh Patil is Chief Investment Officer at Birla Sun Life AMC. Gentlemen, great to have both of you here. Thank you very much. Now, AB Sun Life AMC has put out their annual outlook, both for equities and debt as well, fixed income as well, for 2023. So let's actually sort of talk about that with both Bala and Mahesh. Gentlemen, welcome again. Bala, if I can start with you, what's the big top-down kind of call in 2023 to your mind? From what I read in terms of your outlook, what you're saying is this is the year in transition. Valuations are not cheap and growth is slowing a little bit. So at the margin, a little cautious. Bala?
Yeah. Thanks, Prashant, for having me for the show. I think the outlook that we have is the year 2023 is a year of consolidation as far as the equity market concerned. But having said that, the broad buoyancy that got built up in the last 3-4 years due to the government spending, public sector has been the biggest spender, the government has been the large spender in driving the economic growth. That we believe, I think we should continue. We may also see the interest rate hike that we have seen in the last 1.5 years. We should see actually peak of the interest rate cycle. But it's having said that, the liquidity tightness has also been being witnessed in the market. That reflects on the way money market yields have gone up, the way the bond yields have gone up. And that I think probably should continue for some time, but at the same time, the reversal of currency outlook should also help Reserve Bank of India to provide some more liquidity in the systems if the interest rates moves up quite significantly. At the same time, the banking industry have been witnessing high credit growth, which is nothing but a reflection of, in general, the consumption-driven growth is coming in, and therefore the broad outlook from our point of view is while the macro factors continues to be favorable for driving the economic growth to the next levels, but having seen a significant movement in the equity market, therefore we should see some consolidation. And at the same time, the bond market side, the way I think yields are moving, there's also a reflection of some bit of growth coming back. That's something I think should keep the overall the economic growth on track. At the same time, so this year, of course, the budget is there. The budget also, our own belief is in the current year, given the high level of buoyancy that you have seen in the tax collections, both on GST and in the general direct tax collections, we will probably see Government of India may have enough room to continue their government spending this year too, followed by the private sector capex to pick up as we start moving ahead. And that's something is a broad outlook that we have as far as the 2023 concerns.
Okay, all right. Hi, sir. Good afternoon, gentlemen. Well, the question is that if equity markets are going to have some bit of headwinds going ahead, and it could be a bit of a year of consolidation before taking off yet again, what about asset allocation? Suddenly, gold is moving towards fresh highs. Bond yields as well are moving up. Fixed investments are giving you a fair bit of money. So between equities, gold, real estate, and other safe investments, what should the asset allocation strategy be for 2023?
I think clearly we feel that this year you will get definitely asset allocation will play a very key role. And given the fact that the fixed income rates are high and which have almost gone up about 2.5% in the last few years, as it is, the banks who have been actually keeping the deposit rates pretty low for quite a number of years, now they are beginning to see some bit of pressure getting built up, even the deposit rates to go up. So therefore, the fixed income product on mutual fund space definitely becoming one of the asset class to consider. It doesn't mean it comes at the cost of equity. Equity, of course, will go through an investment phase for a longer period of time. At the same time, dollar-based assets, given the fact that the US dollar could weaken compared to other currencies, having seen the last 2.5 years, dollar gained significant strength compared to other currencies. We see some bit of reversal happening given the fact that mild recessions could hit US market. That is being either one of the way I think play the dollar is actually through the gold and the silver. We believe in general commodity space will remain somewhat buoyant. That again makes it a little more attractive enough to look at asset allocation fund that invest not just only in equity, fixed income product as well as on commodities. So naturally, given the differential between earnings yield versus the bond yields, makes it more appealing to invest in fixed income product, and a mix of this asset class, asset allocation fund becomes actually a way of investing for 2023. But having said that, I think equity is something, while it may go through a time value corrections or maybe a consolidation phase, but equity is something that one should not ignore given the fact that asset class actually is meant for longer term savings on the basis of various goals that one may have. S&P way of investing has remained one of the way of investing. That we believe, I think it should continue.
You know, so I'm taking all of that on board, but what about if you had to give a percentage to it? You know, y'all would be investing as well. So how much would go to equity, how much would go to gold, how much would go to fixed investment? Just a rough number, you know, it gives a broader sense.
I think the way we measure this actually is, I think we run one of the asset allocation fund, which is the Balanced Advantage Fund. As it stands today, taking into account various considerations, whether it is valuations, whether it is volatility or is the momentum, any parameter to look at this point of time, we have almost about 45% of our assets in equity. Rest is, of course, coming in fixed income. That gives an answer. 45 to 48% should be in equity, rest should be in other asset classes. And within the other asset classes, given the fact that gold and asset class, gold and silver as an asset class does not have the coupon bearing, at the same time it does give an appreciations. Therefore, we believe that about 15% should be asset allocation towards gold and silver, and rest should be in the fixed income asset class, which has got a larger proportion of the income coming out of the accrual. That gives a higher level of safety, at the same time high level of prediction on the portfolio return.
Okay, so let's talk about where pure equity investors should be investing in. Mahesh, afternoon. Looking at your key themes and sectors of interest, digital and new age technology. That entire bunch took the brunt of the PED rating last year as interest rates started to rise. What is your expectation when it comes to these new age tech companies? What's the thesis that you're working with for this year?
Yeah, so this year we are looking at four major themes. One is the banking and financials, consumption. Okay, within that discretionary consumption, though currently it is going through a kind of a slowdown, manufacturing, and then technology, because we believe that technology, while this year, okay, there is some concern about growth slowing down, but I think the move towards digital is going to be slightly longer term, and Indian IT companies are well positioned really to capture that. And some of the new age technology companies which have gone through a brunt on the back of global meltdown, we are seeing now that the valuations there are looking not very cheap, but okay, where we can actually value some of these companies based actually on their profit multiples, say 4 to 5 years down the line, and then apply a traditional multiples. So within that, companies which are already well established as leaders have already got a road to profitability and likely to become profitable this year, are companies which we would look at. And I think you will have winners over there also, because there are disruptors in each and every segment. Only thing is that one has to really tread carefully in this space, because the volatility is going to be much bigger over there. So the allocations there could be much smaller. So I think these are the broad four themes which we think will play out, not necessarily from a very short-term perspective, but from a medium-term perspective.
Mahesh, so the themes are banking, financial services, discretionary consumption, domestic manufacturing, right? And you'd keep some of the global cyclicals away. Within domestic manufacturing, what should one really focus on? What kind of sectors, subsectors?
So domestic manufacturing, again, would be driven by the whole China Plus One policy, the government focus on PLI, okay, which is driving investments over there, and generally the pickup what you will see in the broader economy. So within that, I think sectors like, for example, chemicals, okay, which are currently going through some period of consolidation. We have seen some weakness over there on the back of global slowdown. But I think structurally, long-term story there looks fairly strong. Specialty chemicals, the whole shift, okay, which is moving out of China, is a structural one. And we see that as a good theme to play out, especially within the manufacturing side. But the whole investments in the manufacturing will also mean that a lot of these industrials and capital good companies should also benefit out because of the investments which will happen over there. And within that could also be a good, interesting sector where we are seeing companies having improving order book, and also some of these companies are catering to the export market. And they're also, because of the disruptions, what we have seen, some of the companies are actually benefiting out of that. So I think industrials and capital goods could also be an indirect play over the manufacturing theme.
Banking, financial services, Mahesh, will the advantage still be with banks, or you think, within NBFCs? NBFCs, if you put a range of NBFCs on a valuation curve, the amount of dispersion is very large. There are NBFCs at 1-time book. There's Bajaj Finance still at 6.5 odd times book. What's your sense between banks and NBFCs?
So I think banks would continue to do well, I think, because in the period of higher interest rates, I think access to low-cost deposit, will be an advantage over there. And banks, especially with a strong liability franchise, would probably do well over the longer term. Currently we are seeing that the banks are benefiting because of the increase in interest rates, because their repricing of loans is happening much faster than the increase in the deposit rate and the CASA book what they have. I think a quarter down the line, you will see the NBFCs also starting to really get the benefit of increasing interest rates, or being able to pass on those rate increases. So I think that probably is likely to happen in the first quarter onwards. And within the NBFCs also, I think companies which are more on the retail side are companies which we think will do well. And one would want to stick really to the larger NBFCs, which are much more stronger, have a stronger balance sheet, and are able to raise loans at a much more competitive rate.
Mahesh, very quickly, why not insurance and why not real estate? Insurance has been beaten down. The valuations are far more palatable now. So why is insurance not one of your preferred themes right now? And what about real estate? Because everyone says real estate is in an upcycle which will last for a couple of years, and we're only at the beginning of it.
So when you talk about banking and financials as a broader theme, insurance also is a part of that. So we are positive on insurance. The sector hasn't done much in the last 1 year, where we've seen that because of the price increase, especially on the life insurance, there has been some kind of a slowdown and margin pressures. But I think post the underperformance, what we have seen last 1 year, and this is a sector again which should again see a much more steady secular growth for around 15% or so. Valuations are also now reasonable, and visibility of growth is much better. And in this kind of an environment where there are concerns about growth and high valuations, insurance also is a sector, especially life insurance sector, which looks attractive at this point in time. Real estate also has been doing fairly steady. We have seen a good pickup in terms of new home sales. I think the outlook there still remains fairly positive. Again, it's a very narrow theme, and that's why we have not really put it as a part of a larger theme. But again, while interest rates have gone out, mortgage rates are now high by around 200 basis points or so. Could see some kind of a slowdown, but I think the demand for real estate from genuine buyers still remains fairly strong. Pricing, real estate prices are stable. We have seen some increase in especially markets like Gurgaon. So, outlook remains fairly positive on real estate also.
Bala, Mahesh, thank you very much for joining us and speaking about the outlook for 2023. Need to get into a very short break. As we do that, here is something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decision with your money. Nothing in life is guaranteed, but many investors fall for the guaranteed returns gimmick. A smart investor always avoids investing in such schemes and is aware they are illegal and must be reported to the exchange. Any investment in such schemes is not eligible for compensation from the exchange. Hence, it is wise to avoid investing with anyone promising guaranteed returns in the securities market. Welcome back. Still flat on the Nifty as we speak. The Nifty since 11 a.m. has moved in just about a 50-point range. On the way down, it's 17,870, which has acted as a bit of a floor, and on the way up, it's 17,923. So it's literally been a 50-point range on the Nifty since 11 a.m. and even right now, things are very, very quiet. So let's focus on individual stocks. Max Financial is the next one on our radar. It's up nearly 5% in trade. This is after Axis Bank has revised its deal to acquire 7% additional stake in Max Life. Yash is here. He's been on top of the story. He's broken it for us, and now he's going to tell us what brokerages are saying. Yash?
That's correct, Rima. So after Axis Bank announced that it will be acquiring that 7% stake in Max Life at fair market value, there's fair bit of commentary which has come from brokerages on Max Financial Services, which will be a major beneficiary. Starting with Investec, they've kept a buy rating on the stock with a target price of 1,200 rupees. That's an upside of about 56% as per the current market price. What Investec says is Axis Bank's acquisition of 7% in Max Life at the fair market value removes a major concern on this particular transaction, and that's for two reasons. That's because Axis Bank contributes nearly 60% of the total premium of Max Life Insurance. Also, uncertainty surrounding the bancassurance channel with Axis Bank coming in at 20% stake goes out of the window. What they also say, and that's an important line, is that now there is no reason for Max Financial to trade at a discount to its peers like HDFC Life and SBI Life post this Axis Bank deal and the corporate structure simplification. Kotak has also given its comments on this deal. They've kept a buy rating on the stock. They say that the fair value on Max Financial is 1,000 rupees, potential upside of 30%. What Kotak says is that they read Axis Bank's decision to acquire stake in Max Life as a realignment with the regulatory guidance and a stamp of certainty as far as the partnership between Max and Axis is concerned. Now they say going forward that the focus will shift on the merger between MaxFin and Max Life going forward. Jefferies, they've also given a call on this particular stock. The rating is by target price of 860 rupees. That's a potential upside of 12%. What Jefferies says is that revised deal is positive for Max Life Insurance. The revised valuation may lead to an additional payout of about 7 to 17 billion rupees. Also, the revised deal offers visibility on the bancassurance business coming from Axis Bank to Max Life. What they say, two important points: Max Financial can offer dividend to its investors from the additional funds which it will receive from its stake, which will help promoters deleverage the portfolio. Now, one common thing which all brokerages have said is that now from this point, the next important trigger will be a merger between Max Financial and Max Life Insurance. But on October 17, CNBC-TV18 had reported that the insurance regulator is unlikely to view this merger favorably. That's because it's in violation with Section 35 of the Insurance Act. Section 35 of the Insurance Act only allows merger between two insurance companies, but Max Financial Services is an NBFC. Brokerages are bullish on this particular merger, but we'll have to wait and watch if this actually goes through on the regulatory side or not.
Okay, all right, Yash, thanks a lot for that. Well, Prakash Diwan is with us. Prakash, what do you think of this? You know, good news has played out. In the last two sessions, well, the stock is up close to 8 or 9% odd. How much of the re-rating is in the price? Clearly, brokerages believe there are still some more tailwinds in store. Your take?
So, good afternoon, Nigel. So, I think, penciling in this potential merger of both the Max Group companies is a bit far-fetched at this point in time. The only thing that's still remaining to be probably priced in after the run-up that we've seen in the last couple of sessions is the fact that it has played catch-up, and there will continue to be a bit of a catch-up because once Axis comes into the picture, and remember, this 1 year, Axis has been probably busy with consolidating its operation with Citibank's client base, and once that client base is available, there's going to be a whole new set of accounts to cross-sell and upsell this to. So for them, the bank insurance kitty is actually going to grow very rapidly. And when Citi was on a standalone basis, they had other insurance names that they were marketing. So it's going to be a very interesting play once this new acquisition happens. So I'm quite positive on that. Max could probably play a bit of a catch-up in terms of not just APE growth, but also some sort of a valuation bump up as compared to the SBI Lives and the ICICI of the world. So there is enough potential there. I'm not factoring in the merger, as I said earlier, because that's still a very gray area. So that whole thing is now kind of playing out. Is more of a catch-up game on the reset on the P multiples as well, or on the valuation perspective for Max. So there is maybe another 15-20% to go for sure.
Prakash, thoughts on Adani Wilmar and the Q3 update that they gave? This has been one of the best performing listings of last year. They've said that in Q3, the volume growth was high teens and the value growth was high single digit. This is better than what peers like Marico have reported, for instance, in their Q3 update. Thoughts on Adani Wilmar and where it's headed?
Good afternoon, Rima. So, yes, I do agree. It's been a great performance post the listing, but even at the time of listing, the valuations were always a bit stretched. But what's working in their favor, in spite of volatility in the global markets for their most of the input raw material side, is the fact that they have a very strong supply chain in place in terms of bulk imports and then the repackaging part out here. So their ability to place bigger orders, to transport bigger shipments, to be able to repackage those and distribute those is far more superior than Marico's, which probably depends a lot on domestic inputs. So that's been in its favor. So that's exactly why you have volume increase now coming in, where the price impact or the value increase is not as significant because they've actually not had any price hikes as well. So that's one of the reasons why you see that little bit of a mismatch. But going forward, whether the good news is priced in, my sense is still they diversify into newer product lines, some sort of newer SKUs which are value accretive. I think it's going to be a little bit of a steady state performance from them. I mean, you could look at some other FMCG names which are doing far better, like Godrej Consumer, or which need to kind of start getting re-rated as the business grows. So there's lots to choose from, including the dodgy old HULs of the world. I don't see any reason why you can't see some sort of a comeback of sorts in the rural markets in these names. But Adani Wilmar, I think it's probably done with the penciling in of all the good news. Probably see a little bit of a sideways consolidation move in this.
Okay. Prakash, hi, afternoon. Any thoughts on Bharti? It's seeing a 3.5% move lower today.
Oh yes, Prashant. Yes, it's far better than what it was when I saw it a few hours back, and I think it's certainly nothing's changed, but a lot has changed, right? I mean, just one report which highlights the fact that the competitive intensity is going to hurt them. There's been no price hikes as anticipated, but remember, you are in the throes of rolling out 5G. I mean, this is no time to it's like you want to start a new together new product line or service line, and you get people to start with a price hike. That never works. So it's going to be a rollout, and then it's going to be adaptation, then it's going to be engagement, and then the price hike. So there is still time, and Rima sitting right next to you, can check with her. Telecom is a long haul. It's nothing which there is a quick fix here. But the same thing applies to Jio as well. It's just that the Jio rollout has been far more efficient. And the ability to leverage the balance sheet is assumed to be probably superior in the case of Jio as compared to Bharti. But don't take Bharti for granted, or for them to be kind of playing this sitting down. I'm sure they have enough things on the cards to make sure that the rollout is profitable, and this doesn't kind of make them bleed as much. So I think it's a good entry point. If it goes down further to 740, 750 zones from where it is, it just becomes much more value intensive in terms of buying. So you have to look at it from a longer term perspective. And given so much is riding on 5G, where it's just a duopoly virtually now, I don't see any reason why Bharti will not be able to get a decent market share, even if it's not 50%, equally weighted between the two names. It will be significantly promising for them to grow.
It's Bharti for you. But from telecom to pharma, and there are a bunch of brokerage notes and calls which the sell side is making, and this is all with regards to some pharmaceutical stocks. Ekta is here with details in that list. Ekta, over to you.
Thanks for that. Well, I'll start with Jefferies, which has said that a structural or tactical play in the pharmaceutical space is a key debate in the mind of investors when evaluating stocks. They believe domestic formulations and CRO, CDMO have structural growth drivers in them. They believe that generics is basically a tactical play at this point in time. And within generics, a few companies have created structural revenue streams by investing in high entry barrier products. Top picks for Jefferies is Sun Pharma, target price 1,200 rupees, Syngene, target price 750 rupees. They've lowered the ratings on a couple of stocks. For example, Cipla has been reduced to a hold from a buy along with Biocon as well as Laurus Labs. For Laurus Labs in particular, they've cut the EPS by 14% and 22% respectively for FY24 and 25. IIFL has written on Sun. They've upgraded the Sun stock to buy, and they believe that it's one of IIFL's top large cap picks for 2023. They see traction in the specialty business, which is expected to continue over the medium term, and sustained outperformance in India as well as the rest of the world markets.
Okay, thank you very much for that. Prakash, thoughts on any pharma names?
So I do agree with this whole relook on Syngene, Rima. I think that's a play that's got probably missed out where the market got ignored given the fact that it's a very narrow segment that it caters to. But the kind of advances that they have made in expanding their product lines and some of the potential market sizes are fairly impressive. It's quietly moved from that 470, 480 zones to 600 plus without making a big, noise in the market. And my sense is this will continue. It could probably exceed the 1,000 mark in the next couple of years, which is almost like about a 50% upside plus from here. But that's going to be on the back of a lot of rollouts, strong rollouts that they have. So the parent company, of course, doesn't benefit as much, but Syngene particularly has a very, very impressive slew of molecules that's coming its way in terms of commercialization. And the timelines, if you see, are all within the next 18 to 24 months. So that's for a pharma company, for a pharma business, that's really not too long. So I would believe this is definitely a little bit of a positive move. Sun Pharma, of course, there's too much consensus. If you like consensus, you could go for it. But I would believe that it's all well discovered. There are no pleasant surprises that could be very potentially strong triggers. But Syngene, for sure, is something that you could look at.
Okay, all right. Prakash, thanks a lot for joining in today and discussing all those stocks with us. Well, it's that time of day, 3 p.m. odd, when Nimesh joins us to tell us what is he picking up into in terms of dealing room chatter. Nimesh, what's the buzz this time?
It looks like there is a day of consolidation, and it looks like there is a good fight going on between the bulls and the bears. The bulls are trying to defend 17,800 very strongly, but I believe the bulls don't have the ammunition or the support from the FIs. So the FIs are net sellers again in today's trade, is what I understand. There's going to be a small market at close basket selling, largely dominated by financials. So that's the other feedback that in that MOC basket. There are a lot of financial names which are going to get sold into at a leading FI desk. So again, that's not supportive as far as the banks are concerned. The sector churn continues. So today is a day for OMCs. So a lot of the OMC stocks are buzzing in trade. Some alt counters are doing good within pharma as well. But largely the feedback is the flows are negative. There is not much momentum as well, whether it's the mid cap or the small cap. And again, I've been repeating every day, but we're still in that range between 17,800 and 18,300. So that's the big zone which we are stuck into. Either ways, we have to break out for a decisive move. So that's something needs to be tracked. But today, I guess the bulls are trying to defend 17,800, but there is no support from the FI.
Yeah, it appears that at the lower end of the band, there is a bit of a bounce, but sustenance of that is not really forthcoming. But what about individual stocks? What are you picking up?
So in terms of individual names, the first stock today is Canfin Homes. That stock is mildly in the green, but I guess there is some bit of action back. Some volumes are picking up at leading HNI desk. And I understand the trigger would be appointment of the new MD and CEO, which is likely to come very soon. So, and most likely the appointment is, the new MD and CEO is likely to come from a leading MFI. So that's something to track in Canfin Home going forward. So that's the first one. The second stock is Bharti Airtel. I highlighted in the morning that JP Morgan downgraded the stock, and that stock was under pressure. But not only that, there is selling pressure across multiple FI desks in Bharti Airtel today. So that's the reason why that stock is under pressure. The third stock is Tata Communications. Again, out of the blue, that stock is in the green. So good volumes as well. I understand there is a small buying flow at a leading FI desk, but largely it's a trigger on the quarterly earnings. So recently there was a CLS upgrade on the stock, and they said Q3 earnings will be the big trigger for Tatacom going forward. So that's the reason why that's buzzing in trade. And the last stock is Kotak Mahindra Bank. Remember, 2 days back, I highlighted about the block not happening. Now it looks like some bit of buying interest is back. So today, for instance, I understand there is good amount of buying interest at a leading FI desk in Kotak Mahindra Bank. So the delivery volumes are going to be quite high. And there is a bit of genuine interest back in Kotak Mahindra Bank at a leading FI desk.
All right, interesting names as always. Nimesh, thank you very much. We'll keep an eye on what you highlight. We'll take a break here. We are back. As always, we get you buy today, sell tomorrow calls from our technical experts. That's coming up in a bit. There's 18 minutes to go for market closing.
Welcome back. We are coming to you live from the Motilal Oswal newsroom. You're on CNBC-TV18. Well, the markets we're holding with a bit of a downtick. We're down close to around 20 points or thereabouts. So interesting to see where we go from here on a closing basis. I think we have Amrish who's joining in as well. Before that, let's go across to Mitesh. Mitesh, what's your trade at around this 315, 320 PM odd? View on the index as well as a couple of trades.
Nigel, on the index, I've been saying that we are still consolidating and we are, kind of narrowing. So 17,820, 18,150 are the triggers. So wait for that. On the stock side, I had NMDC earlier. SAIL is also a good breakout candidate. So BTST here with the stop just below, levels of 88 and a target of around 91 can be looked at. And the other one is Siemens. It's the stock, which has been sideways, but today is showing some multiple positive crossovers on the moving averages and indicators side. So BTST here as well. Keep a stop at about 29.24 and a target of 29.70-75 for tomorrow.
Okay, all right, Mitesh, thank you very much for that. So those are trading ideas coming in from our technical experts. Amrish Baliga is with us this Wednesday afternoon. Amrish, good afternoon. Good to have you with us here. The market is now, displaying the opposite of what everyone has been used to, which is not buying the dips, but at high levels there is consistent selling, which seems to be coming. Nothing dramatic like yesterday, but there is selling. Your thoughts, Amrish? I mean, what is top of mind right now? Is it, the budget is still, 2.5 weeks away. Earnings are yet to get into the full flow of it. To your mind, what is top of mind?
Good afternoon, Prashant. Basically, we are in a range, a broad range of 17,800, which is a very good support. And there's a very clear resistance band of 18,200 to 18,400. Crossing this will be quite difficult. And looking at the earnings, although TCS, came out with the muted growth, and people are still quite cautious on IT. But I believe that we should see muted growth across most of the sectors. Barring a few, possibly like auto should be really good. But most of the others will see muted growth because, we could see a lot of inventory losses because, people, most of the companies have, stocked up huge amount of inventory and especially in commodities, we have seen the prices coming down. So there could be inventory losses which should be booked this quarter. So margins would be under pressure. And again, we have seen FI continuously selling, so there will be no support from that side. So I believe that at least the first half of this year, would be quite flattish or maybe negative. In fact, if we break 17,800, we could see even levels of closer to 17,000 or below. I think that's where the valuations becomes quite decent for fresh purchases.
Okay, hi Amrish, good afternoon. Amrish, normally you join in and you give us one particular stock. I believe this time around you're tracking, IRCTC. Give us a rationale out there.
We have seen IRCTC doing extremely well since listing, but then we have seen weakness recently, and this is due to a couple of reasons. Earlier we had seen that it was hit by that convenience fee controversy, and then there was a controversy regarding monetizing of passenger data. So this weighed on the stock, and in the last 2-3 months, we have seen that the Q2 earnings which came were lower than expected because catering and rail division, didn't do as well as expected, and we have seen EBIT losses in tourism segment. And lastly, in December, we saw OFS was done at a steep discount, so this also put off a lot of investors. But now I feel that most of these negatives are already priced in. And now we should see catering price hikes happening. As well as there's a huge expansion happening in rail need division. So this should also start contributing much more than what it was doing earlier. And the big kicker, I think, will be the 100 sets of Vande Bharat Express, which will be introduced over the next 2 years. I think this will be a major kicker on the revenues going ahead. And we should remember that IRCTC is the only private train operator with experience of operating 3 trains. So we should see more coming in out here. So for FY25, my expected EPS is about 15. And based on that, my target price is about 825.
Okay, all right. Ambrish, I want to ask you about a couple of these steel names, but let's run you through what JP Morgan first believes on steel. They believe that more price hikes are likely to be on the cards. They are highlighting the fact that Chinese steel prices have moved from around $500 per ton all the way to around $620 per ton, and some deals are happening even at $635 per ton. Going ahead, they're expecting demand to come back. Remember, the Lunar New Year is there, so post that they're expecting demand to come back in style. Domestic prices, yes, they're up by close to around 1,500 rupees per ton, but now the cost of landed imported steel is hovering at roughly around 60,000 rupees. That would mean there is still a price difference between domestic steel and steel that's being imported. So because of that differential, they are working with a 3,000 rupee price increase in the next 2 to around 3 months. They take on board, though, that coking coal costs have gone up. But they are saying that the benefits will outweigh, the negatives, and that's why they're working with solid earnings growth for these steel majors. Given the hopes that there is on higher steel prices, some of these stocks are holding higher. Amrish, your view on the steel names? They've made a good comeback. How much of it is already done? Do you believe there is more, a more up move that is in store?
No, see, one thing is very clear that this is not a super cycle. What we've been talking in the last 2 years, there is no super cycle in steel. It was an upcycle, and then we saw a correction. Now I feel that this is a temporary upcycle because, like over the next few months, we are surely going to see slowdown in US and Europe. And once this plays out, I really don't see the demand shooting up, or because of which the price is going up for steel. So I believe this is a temporary upcycle. People should utilize this upcycle possibly to book out. In case one hasn't, in the last 6-8 months, I think one should do it now.
Welcome back. Sub 17,900 on the Nifty after the terrible Tuesday that we had. Today has turned out to be a very quiet session, not gone anywhere through the course of the trading session. Some mid-caps are firing though. Marksans Pharma is now up close to about 6.5%. Nazara Tech has started seeing buying, so that stock has gained 5.5%. And oil marketing companies have made a comeback. So BPCL is one of the big movers in the frontline space. That's up 1.5%. IOC, HPCL gaining close to about 3 to 4%. So those are some pockets of strength and activity today. Ambrish is still with us. Ambrish, are oil marketing companies looking attractive, perhaps a tactical play, given the fall that we've seen in crude prices?
Absolutely. That's one of the reasons why I recommended IOC. I think I recommended levels of closer to 68 or 70 with a target of about 93 or 94. This is basically because the retail prices have been holding on very steady, and there's no change in that, whereas we are seeing the crude prices continuously coming down. So clearly, the margins which they had lost in the last 6 months, they clearly make up in this quarter and next. So a tactical play, no doubt, and I think we should still see another 10 to 15% up move once the earnings are out.
Okay, all right, Ambrish, thanks so much for stopping by and discussing all those stocks. We'd like to discuss a few more with you, but maybe next time. Well, for the time being, it's time, I think, to start winding down on the markets for today. Well, the Nifty ends a little in the red, so we're down close to around 20 points odd. The problem today was Bharti Airtel, post that downgrade coming in from JP Morgan. It goes home with a cut of around 3.5%, and select pharma names and pharma-facing stocks, they got hit. So you had Cipla, Divi's Laboratory, as well as Apollo Hospitals. All of them ended with cuts in today's trading session of roughly around 2 to around 3%. Big boy Hindustan Unilever as well was trying to show some bit of traction, but that got sold into. That one was down in trade today, and Titan posted its fairly good quarterly update. The problem is on valuation, so that stock goes home with a bit of a cut. On the flip side, Hindalco was the one that was powering ahead, up 2.5% odd. A bit of an uptick on aluminium prices. You have China reopening as well, that's helping them. BPCL, hopefully the marketing margins rebound in style. Sun Pharma was the lone beneficiary actually from the pharma space. While the rest of the pharma index was under some pressure, Sun Pharma did well. And HDFC Bank, the bulls would like to thank both the HDFC twins because they ended with gains of around 0.5% to around 1.5% in trade. and TCS as well is now higher than what it was prior to the results. What else, guys?
So by the way, I have to point out that market breadth is positive. It's mildly by 100 stocks or so, but the numbers tell you that overall NSE advanced decline ratio is in favor of advances. So I'll start with the gainers here. Tata Communications stood out with a 4.5% gain. NMDC was up 4.5%. PTC India 5% gains. Marksans Pharma with about a 6% pop today. Tata Investment Corporation 5% gains. Greaves Cotton was up 7%. I think we had the management of Greaves Cotton out of the Auto Expo earlier in the day. There was Sterling Tools, which was up 9%. Big gains on big volumes as well on that one. Edelweiss was up 6%. Nazara Tech about 5% gain, 607. Rate gain yesterday up 4%, today up 5% at about 335. And Goa Carbon and Bajaj Hindustan, a bunch of others, which were up between 5 and 10% or so. So this is broadly the volume-led gainers list today in the broader markets. Prima.
Well, Cipla and Biocon were under pressure. Remember, today Jefferies downgraded these pharmaceutical names. So Loris Laboratories was down 3.5%, Biocon losing 2.5%, and Cipla in the frontline pack also lower by 2.8%. Motherson Sumi, Samvardhan Motherson, was up yesterday, but today it's retraced some of those gains. The stock ends lower by nearly 2%. On the gaining side, oil marketing companies have a good session. IOC, HPCL outside of the Nifty, ending with gains of close to about 3 to 4%. Nalco, SAIL, both these stocks were up yesterday, and yesterday was a down day for our market, but Nalco and SAIL were higher in trade, and the strength continues even today. All in all, the Nifty is going to end absolutely flat. There goes the bell. The last tick on the Nifty is 17,890, a cut of 24 points. Mid-caps at the index level is down 0.4%, underperforming the benchmark indices, but the advanced decline ratio goes home in favor of the gaining side. That's the day for you. Very, very quiet. We're going to slip into a very short break, but on the other side, India's premier motor show, the Auto Expo, has made a comeback after 3 long years. We'll get you the key highlights. Stay tuned.